Welcome to Momentum Monday. Today is August 28th, 2022. Howard, where were you on Friday?
You know me, I've been just watching, waiting for this rally to either prove itself for real or roll over. And, I've been sitting on my hands, so gladly it's not fun just watching, but it's definitely saving me a lot of headaches. But Friday was just awful. Some of the smartest guys have sidestepped a lot of the damage. We're getting bullish. And so it'll shake some people. This week's a big week. Next week, the following week more so after Labor Day. But Powell didn't seem to say anything that was unexpected. But what do I know?
Yeah, look at that candle. It's probably like the biggest.
But the volume too,
and the volume exactly. It's just that's a pretty
slow time of the year, and then
pretty serious. Yeah,
like I look at Shopify and Zoom, like they're great companies. They're just overvalued. Right, like no bounce, and we're right back at the lows on volume. So I'm pretty much backtracking again. There's a lot of relative strength in tech that you start showing on this bounce, but now you really got to clean house. With anything that didn't bounce, like if I look at ARK, there's still so many people that just talk about it. And I don't know, look at the like that's going into the 30s. Maybe the 20, like she doesn't know what she's doing. This is a brutal bear market on growth. And a lot of this is just tied to interest rates, especially in growth. Just everybody has the same spreadsheet, which works in your favor when rates are 0, and now work against you when 1-year rates are 3. And the dollar, which makes all US products just expensive. And look at that, like euros breaking down, dollars breaking out. And the dollar looks like a growth chart, and that's the opposite of what you want. And then you look at the rates, and that looks like the opposite of a growth chart, which is, rates are rising. Yeah. Just again, like I don't think it gets away from us here. I'm not bearish. I'm just like giving up. Like I need strength in solar. Well, we got strength in solar, some industrials. That's not enough. Some aerospace a little bit. Like what do you see? Any like semis look terrible.
The rally in the past couple months was based on the premise that the Fed is going to slow down its tightening policy, and on Friday it kind of became very clear to, I guess, the majority of people that is not going to happen, even though the price action in the market in the last few weeks was kind of foreshadowing that. Because if you look at what was going on in oil and industrial metals and in fertilizers, like just in the past few weeks, when they go up, that means that the market thinks inflation is likely to stay high, for the foreseeable future, which means that the Fed is not gonna soften its stance. So it was kind of foreshadowed by the strength in commodities, let's say. But as I said, maybe that summer rally is over, and now we'll see just another test.
That wasn't really a rally.
It was a pretty good rally, Howard. Like a lot of, look at biotech. It went from, what was it, like 65 to 95. That's 50%.
Yeah, for people that caught a bottom. But most people were buying in the 90s on the way down, thinking that was the bottom. Let's go back to a weekly, Adam. Let's be real. Like, you take home no positions, but the average person was buying what they're in the 90s or low hundreds, saying, okay. So now they're happy to get back out, almost break even, right? No one, for a few traders that scalped 60 when the VIX was in the 30s, great. But most of the people were buried because this index was down, so. This is just, the good news is, I don't think the bottom falls out. The bad news is the bigger getting bigger and the weaker getting weaker. And it's the opposite of what should be happening and for what a healthy economy. And then the most important thing is the layoffs have still been small. So people may not be able to afford to buy a home, but they're still making a ton of money. And if you don't need to buy a home, employment is, you can have 4 jobs and you can start a business and you can learn to trade and you can be a YouTube influencer. So people haven't really started feeling the pain. They still have kind of funployment. If you're a Twitter employee or a Facebook, Google, Apple employee, it's been funployment for 2-3 years. So you travel, you fart around, you invest in startups. You're not following the bank stocks, you're not following the home builders, but the real economy, looking at rates and the dollar, is starting to create just tremendous stress. I'm seeing it in the quarterly letters that I read from my startups, especially around real estate. It's a mess. Let's look at the home builder. Oh, you are. So
this is it.
This would be a good, in this area, we need to see some bounce, but relative strength 37. All the red bars, all the down days are on massive volume. And that was kind of a feeble bounce. You had the trap, rates were, still low in December. You had the breakout in home builders. This is a massive industry. So you have a combination of, rising rates, overpriced homes, Fed focused on the employment rate, which is high still. So I still think they're in hike mode. I still think we're in inflation mode. I hope it doesn't get above 8%, 9%, but we have to play defense. I mean, you're playing defense and you're a trader. Like you watch.
Yeah, you can say I'm playing defense, but I'm active every single day. Like for me, it doesn't really matter that much. I mean, yes, I'd rather be a low volatility bull market so I can, just allocate my entire capital into, 5-6 names, swing trade them and don't intraday instead of intraday trading. But it is what it is. Like right now, I'm just more nimble and just go after shorter term opportunities. Like it's not that much different really for me.
I think in a low vol market, you're 50-60% long overnight because you're in 1 month swings. Now you're 0% overnight.
Yeah,
that's a huge difference. Most people don't have the luxury, especially if they have a job outside of just investing. So, when you have a combination of no trends, which I noticed, and the fact that you're very defensive overall, it's very hard for the person that's, got a lot of exposure to get out of this alive.
Look, some of the leaders are still kind of holding well. Obviously, there are very few of them. So I think we'll learn how strong they are during that pullback that we're currently having. I mean, for me to be really interesting to see if the solar names like First Solar, and even though that was a reversal candle on Friday, if we have another red candle, that's a signal for a pullback, for a deeper pullback, like ENPH and like Celsius, all those. There are very few momentum names. It will be interesting if they just build new bases above their 50-day moving average as the indices are pulling back. I mean, futures are down about like 1.5%, so they'll probably open up tomorrow near the 50-day. So it will be probably will see some initial bounce. So, but it will be interesting how
it's a quiet week, right? You have Labor Day coming up, a long weekend.
So,
and I was looking at retail. Oh, what a mess!
I mean, if you look at the weekly charts, like Howard, honestly, most of them look the same. Like we had like a 2-month rally to a declining 200-day, and where they found resistance and they reversed. Like if you pull up basically any chart, they kind of look the same.
Yeah.
Rally.
What about it right when we hit the 200-day? I mean, it's
just, the machines, all of them are looking the same.
Yeah, the machines have
just give me a symbol like a sector, and I'll show you they look the same.
No, but what I'm saying is now you have to look at the ones that really didn't bounce in tech, like Shopify and Zoom, like stocks that I own that I'm just ready to throw in the towel, right? Like,
I mean, at some point they will become value stock, the ones that survive, but
depends on a lot.
Could
Depends
be a year
on
from
rates.
now. So
but it's also, remember, there's a lot for these growth stocks based on their valuations. A lot will depend on rates, right? If people can't start e-commerce business because they can't go on Alibaba to source product because, you know, then Shopify suffers. And, you know, it's the ranges in the Chinese stocks are tightening. But, you know, the gambling has seemed to have come out of the market, right? There's only a few stocks left that there's gambling in. I don't know, where's the Trump SPAC at? Let's pull that up. Just as
which one was that?
Best Buy's over, so that one, Bed Bath and Beyond's over. So that's another one.
What's the Trump SPAC? What's the symbol?
DWAC. Let's see what that is. This is probably the most speculative. Oh wow.
Okay, let's pull up weekly. So this is it.
Yeah. So that one's dried up. So where's GameStop? So, you know, you've almost killed all the, so you've almost killed them. No, but you know what I'm saying. The spikes are less, the highs are lower, the lows are lower. I mean, they're almost.
Maybe the bear market is not going to be over until, you know, GameStop.
Yeah, I'm saying, but it feels like they're ready. Like they're a couple more bad months and they'll be forgotten finally.
AMC for sure, yeah.
So you can see the lower highs and the lower lows. It's over. It's a bad business. They fucking did some. I mean, it's gross what's going on here. The good news is supply is dropping. IPO index. There's nothing happening. The bad news is I look at companies like 3M, which the industrials are strong, and they just lost a lawsuit. And like industrials are the strongest sector, and look at 3M. I mean, yeah, they're going to have to file bankruptcy of one of their medical units because it caused kinds of hearing problems to the military, one of their products. But the industrial is supposed to be strong. So look at one of the American great companies. Go pull up a monthly on 3M.
Yeah, this was weekly, which is, you know, pretty weak. But okay, here's monthly.
Yeah, I mean, these are just heavy.
Yeah, 10-year low,
basically. 2014. Yeah. These are great brands. So it's tough out there. I think people really need to consider how much risk they have on.
Yeah, the strength lately has been like in energy, anything energy, like
yeah. I mean, I own energy, so how good could that be? You know, I got long XLE just because.
Okay.
I actually think it's going to keep working, but
yeah, it's
possible. I don't have a lot of conviction. And I'm hoping I'm wrong in many ways. Look, you know, that's not
in a way, XLE is kind of the opposite of the general market. Look at it, pull back to the rising 200-day, and then it bounced, and then the market
took a while to bounce, and now you can just see, people are still underweight energy, and now we're heading into winter. Summer's over, and we're heading in. The price spikes are crazy in Europe around fuel. So this policy is broken. So there's two things that can do: low supply and all this money that's going to be made in energy, which is going to be in the trillions, especially based on what the Saudis are doing. It's going to come back into the U.S. because strong dollar. So again, like strongest house in a weak neighborhood, but you know why? You know, people like me in our 50s that have money or 60s can buy 3.5% 1-year notes. With no risk, T-bills, right? And that's you know, and combined with U.S. dollar going up, if it's another good year for the U.S. dollar, who cares that inflation's 8%? You break even in a market where everybody's getting killed, and you're just so much further ahead than everybody. So I'm really watching Apple because I think that feels like there could be a disappointment coming. You know, look at that, like decline, like it's just kind of people are hiding out there, and it wouldn't take much for that to tip over. But that's where the strength is. Apple is the global stock market right now.
Yeah, it's the strongest, definitely among the fans.
I don't think it can lift the market, but I think it can hurt the market.
Look
right?
at
You
the
can
others.
see the damage in Google and Amazon and Facebook, but it's all on Apple's shoulders. And that's terrible for the world at many levels, because what they've done to Facebook and Shopify, as much as we may hate Facebook, is just brutal. So I mean, there you have it. Like the Apple chart is what's left. So people who want to speculate can trade Apple.
Yeah, in the funk space, definitely, it's all about Apple. Yeah, and obviously Tesla is a little bit calling, but it's starting to, you know, to weaken here near the 200-day.
Yeah, I think Tesla's its own animal. It's like a meme. He has so much power and cred. So again, but if you want to trade Apple and Tesla, you can probably forget about the rest of the market. A good traders are probably can trade those two. It feels like guys like you have the edge, right? Like you're watching the market, you can the indexes are doing nothing, and there's a lot of stock volatility. So it seems like you have the edge.
I mean, anyone who has a lot of market experience.
I have experience, but my experience says I don't want to trade against Ivan all day, so I'm just sitting it out.
Okay.
So that's what I'm using my experience for. And I think people that think they can beat this market right now, I mean, I think there's still a world of hurt out there. But I don't think it felt crashy in April, May, and we did. And I think now that at least, the Fed is more on side, feels less like a crash opportunity.
I mean, the Fed is tightening, but on the other side, you have the government constantly coming up with new stimulus. Like just last week,
they can't keep tightening; they'll go broke. So.
But they don't care. I mean, they can always print some more. I mean, last week,
that would be the end of the market. So
they keep coming up with new stimulus packages. Last week,
no. I'm saying
was the student loans. Before that
they
was like
going on
clean energy and semiconductor bill. Like they're spending more and more money. So. It's kind of balancing what the Fed is doing.
I think I saw green shoots. I still believe that the other side of this is going to be fantastic. I still think this is just
of course maybe all those years of high energy prices, someone's going to come up with some
they are
genius inventions that are going to make energy a lot cheaper for the next 50 years.
Yeah, but water too. We've got to solve those issues.
Yes, and everyone will benefit. So, I mean, as they say, you should not let the crisis go to waste. So, and I'm sure that there are people working on genius innovations that are going to substantially improve human life.
I feel like people are just slowly getting melted away here in the market. The average stock price is just covering up. Like the markets are way the market indexes are covering up a lot of there's just some real horrible numbers out there. And the market's kind of, if you own the S&P, you're okay, you're only down 15% or so. What's the index down this year?
So this is down from the all-time highs. So that's December, 24th, so about the same, 15%.
Yeah. So that's nothing.
It's not bad.
And most people index, so this is a nothing pullback, especially with the strong US dollar and employment. So it's this next 10-15% move that matters. If it's down, people will get woke pretty fast about like, oh my God, like that's a dent. When you get down into the high 20s, 30s in the indexes, if that were to happen, I think the Fed still has room to play hardball. The risk is when you get in the high 20s in the S&P, if we go down another level, I want to see what things look like. So
if it goes down, probably the Fed is really going to pivot. I mean, because they're watching the market, they are.
Yeah. Oh yeah. But like you said, they're sneakily spending a shit pile out the side doors, in their own like semiconductor quantitative easing and the energy stuff. So anyways, that's it. I wish I could be more bullish, but at the same time, I'm not super bearish. I just feel like time and valuation compression has just got to work its way up. What are you up to this week? Weather's been great.
Yeah, my family is visiting, so I was just spending time with them, and they're leaving on Tuesday. So,
Mama Ivanhoff's in town?
Yeah.
Did you take her to the beach for volleyball?
Not for volleyball, but yes, I took her to the beach. Yeah.
Very nice. Very nice. Okay, buddy. Have a great week.
All right, Howard.
See you, everybody.
See you next week. Just figure out how to stop this.
See you.
See you.